Welcome to Trading Lounge and the gold and silver report for the 11th of July. Last time we brought in silver, last video, we looked at this sort of capitulation move down through here on this low here. Now we remember that gold is way up here somewhere, so the gold silver ratio is is worth noting and worth looking at this market. But what I found interesting about this market, as I mentioned last week here, is that on this spike here, this little move up through here, I think it could be the beginnings of the first impulse wave to the upside. So I'm not saying that it's going to go up like this, but I'm just saying that after this correction here, this is probably the first little 5 waves in here, the first impulse wave, and this is kind of what we're seeing over here. We're not quite there yet. We need to see 5 waves up, but it's just getting better and better. So let's just focus in on this little move here for this. So this is it here, and let me just double check on something. Yeah, it's okay. So we're not long in this at the moment. Last time we spoke, we were just in here somewhere with this, I think, right? Or maybe even up a little bit, I can't recall. But the main takeaway from here is that we're looking at wave 1 here. We're looking at a nice 5-wave structure here for wave 1 and 2. Another nice impulse wave for wave 3 here. A nice corrective wave for wave 4. And then we're looking for wave 5 up through here. Will it get to the major trading level 2 here at $20 or 2,000 in these ounce contracts? But yeah, I mean, it certainly looks like it. It definitely looks like we're getting 5 waves here. Now, it's no point in us in buying this, because this would be a longer term hold. But, I mean, I just see that equity market, especially the new world stocks, the bios, the AIs, the genos, and so on, and really the tech stocks in 3D printing and all these sort of things are really the new world. And I see that they have so much potential to the upside. They're just starting like silver. So there may not be any point in securing this here. And still, we're going to track it anyway with gold. We want to have a look at all this, but we won't be interested in buying this here until the point is, until we can, we'll see these 5 waves come up to here somewhere, and we're not interested in that. We're just monitoring this market, and then we'll see some type of correction. How far it pulls back, I don't know. We just need to track the actual structure. If it's a wave 1 and a wave 2 here, then we'll see the A wave come in quite sharply, and we'll see the B wave in 3 waves. This will be 5 waves, 3 waves, and 5 waves here. And then, in a nutshell, there's a couple of different ways we can prove all of this, is that once the market takes out the top of the B wave here, then that's confirming that we're going into wave 3 at that point. Right, so that's the thing here. Now, obviously, that's a long way from here. But this may not pan out like this. This may be a much smaller situation. It may just be that, and we don't even reach up here. So we come up here from the 4th wave here. We come up for the 5th wave, come up to here somewhere. And then we have an A and a small B or something, and then down for the C wave here. And, it makes it a much more presentable sort of case here. But what we'd also be looking for here is, no matter where the low is here, let's just take it here, we'd be looking for the first 5 waves up here. That first impulse wave there from the low, wherever it is, then we'll look for the ABC pattern back here again, and then we'll go along at that point. Or we could even go along at this point, because we've got 5 waves in the opposite direction here. So we'll get quite close to it. Wherever it is, we'll get close to it, and we'll get on. It won't be perfect, but it will be good enough to purchase ETFs or silver in physical. Yeah, so that's it for silver. I just think this is interesting, and we'll keep talking about this, and We'll see how it goes. Now with gold here, this is my bullish count for gold. Of course, we've got a negative count for gold as well, where it fails around this point here, but you'll need to be on our website to see those charts. But otherwise, we're looking for a move higher here. If you know the trading levels, then we know that 18 here is, we always call 8 a profit-taking number. So between 1,000 and 2,000, which are major levels, we would have the Fibonacci numbers as price ratios as 1, 2, 3, 5, and 8 here. Now they work out in minor levels and medium levels. I don't want to go into that today. We've been long in this market in here somewhere when we first started doing these videos, and we're taking profit at the 1800 here. Now this is also sort of interesting as well, because if we look at the one of the ETFs for this, let me just get up my trading levels charting program here. So this is a daily chart. This is GDX here, and it's the ETF, and it's got a different count in a way, because this low here, if I can just squash all this back up here, this is kind of interesting to point, well, it's just worth noting anyway. So from these lows here, this sharp spike down through here took these lows out here. So we can't count the ETF the same as the gold, because this spike in the low here came in lower than this one here, where in this market here, this spike here was way up here for this. So it's a different thing, you know, it's a little bit different. So, but what I wanted to point out here though was that, let me open all this up a little bit, and all I've just done this morning is just track this. And these are medium, these grey lines are medium levels here. There will be, and the reason for just putting this on here was, and not the major levels or the minor levels or anything, was just to point out that we're approaching $40 here. So if I count this up from the low here, we've got wave 1 and 2 here, and then 1 and 2 here, 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave here, and the fifth wave in here. You'd need to see this on the intraday gold to figure there's 5 waves out within this, but wave 3 here, and ABC for wave 4 here, and then coming up for wave 5 here. So I think we've got a little bit more of a push to come in there, but once that's done there, once these 5 waves are done here, then we'll be looking for this ABC pattern coming back here for this. So this will also be this the reaction that we get at the $40 here will be the same that we'll be seeing at the $1,800 mark for US spot gold, which is here at the moment. So I've also altered the count around here a little bit as well. I said that I would need to because something wasn't quite right, and so I've made those adjustments. So we're going from the monthly to the weekly. And the weekly here, if I can bring that back in here from the low here, I was looking at this as 1 and 2 here, and then 1 and 2 here. Now I know that it's possible to have this wave 2 sitting over here for this, but it won't bother us at the moment for this, because yeah, it won't for a couple of reasons. I won't go into that. I just really want to focus on where we are with this situation at the moment. So I've labeled this from the low here as 1 and 2 and 3 and 4 here and 5 coming up here for wave 3. And, you know, when we normally look at, if I can just grab that roughly there, and wave 3 here. So we can see that from wave 3 to wave 4 here, and that's the wave 4 of 1 lesser degree here as well. So the wave 4 here is pulled back to the wave 4 of 1 lesser degree, which is in the 38.2% range here, the 40%, and well closer to the 50%, I guess. But good enough for that size of structure as well. So then we're looking for wave 5 to the upside here. Now, I was hoping that we would just continue to the upside at to 2,000 here, but I know that the 1800 is going to give us a little bit of grief, and I know that the 40 on the EFT is going to GDX is going to give us a bit of grief, a correction there as well. So from this wave 4 low here, if we go to the daily chart now, so from this wave 4 low here, I've just rearranged this a little bit. The count's kind of, well, it's different. So that's not the low there. That's the low on this one here. Anyway, I won't go into that right now, but there's 5 waves here of 1, 2, 3, 4, 5 for 1 and 2 here, and then this counts as 1 and 2 in here, a bit hard to see, but 3 here, and then 4 way over here, and a bit of a triangle pattern, and then wave 5 here for wave 3, and ABC for wave 4, and now we're going up for wave 5 at this level here, which I will just darken a little bit because it carries a fair bit of weight, the 1800 area through here. And I'm still expecting another little high to come in here, and we'll look at this particular structure in a moment. But from wave 4 here, all I'm suggesting here is that we can count 5 waves, an impulse wave, to where we are here at the moment. Now, I'm always open and flexible with wave counts. All I'm looking for at the end of the day is to make money. So in terms of making money at this level here, you know, we normally trade to big numbers and then get out and then get back in when we're ready. So, you know, we'll be looking for something, you know, some type of correction across this level. It's as simple as that. Once we've got these highs in here, then any breach of those highs, and we will be long again from that point. Make no mistake about it. At the moment, though, this is just derived here for this. So if the 18 becomes the support, then we will be long. As simple as that. So this level over here had the arrival, the reaction, the first high above the level, and it sat there and it became support. So we could go long above this high here. So that's what we're looking for. We're looking for the first highs above the level, but we also need to understand too the wave structure in this particular space here. So let's go into the 4-hour chart and pick it up from wave 4 here. So way down yonder here is that wave 4 here, and this is how we've been counting it to the upside. So it's like on the 1700 here, we went long here. We could have got a better position. We could have lifted this down lower through here, but I don't update this every day, so I can just give the wider picture of things. So our strategy was to go long here and take percentage profit here because we expected within group 2 here. So from 1700 to 1800, we've got the trading levels again. So we've got the Fibonacci numbers 10, 20, and 30, which is 1, 2, and 3, then 5, and then 8. So 1, 2, and 3 make up group 1. 5 is the midpoint. 5 is the second strongest number in the market. You can see that we were resistance here, and then now we're support here. The next group up is group 2 here, which is 65, 72, and 80. So breaking down the problem from 1700 to 1800, this is how we do it. We have group 1, and then we have the midpoint and group 2 here, and they're the Fibonacci numbers as a price ratio here as well. So in the bigger picture, the 1800 here is the minor level. These are sub-levels, and this is a minor level here. And also too that now we're at 1800 here, we use this group here. So group 2 and group 1 here is the swing range for the market to play out at the 1800. If the top of group 1 here finds support, the 30, then we'll a tested support. We will go long from that point. If this market just continues to go up through here, we need to be long once that becomes the tested support here. This should also be the support for the lower end of it here as well. Now, if it's in that range, if this becomes the resistance here, then we're going to be looking at a move lower from that point, and we'll look to the wave 4 of 1 lesser degree at this point here. So the levels come in really handy. They break down the problem and give you a solution, so we know where we are most of the time. So in this case here, I was looking at this being wave 1 here with an ABC for wave 2 here, then 1 and 2 here, then 1 and 2 and 3 and 4 and 5 for the third wave, ABC for the fourth wave, and once again there is 5 waves in here. We just need to go into the intraday and check it out. But wave 3, ABC for wave 4 here, Not pulling quite back to the wave 4 of 1 lesser degree here, but okay. And then 1 and 2 here, then 1 and 2 and 3 and 4 and 5 the third wave and the fourth wave here. So I think we've still got one more little move to the upside here. I'm not interested in, our aim was to take profit, TP at the 1800. So we've done that. We're just going to wait now and see what comes. So that's a nice, what is that, 1740, say 1742 to make it easy to hear. So nice $58 profit there, but we took a percentage here as well, just to be sure. Yes, now, could I have this wave structure wrong here, and could it continue to the upside? Yes, but as I just mentioned then, we would be looking for I'm expecting one more high here, so that high here, that will become the relevant high here. So if I can just draw that up to this point here somewhere, then that top there is going to be the relevance for me. So we will look to go long. I will put a video out when it's time to, or anything important happens. I'm putting video out today because we've reached our target, that's all. So yeah, we need that pattern. We need that top in here, and I can't use that top because we're not finished yet. If I go to the hourly chart, so we'll probably pick it up from maybe this wave 4 here or this wave 2 here on the hourly chart, just to go in and check that out. Where are we here? So squash it up. Okay, we can come back to this minor wave 4 here in this case. And we've got a nice wave 1 here and 2 here. And you can start to see 1 and ABC for 2, 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave here, and 1 and 2 and 3 and 4 and 5 here for the third wave here for this. And then here, or look at this, is the A wave, the B wave, and the C wave for wave 4. Doesn't quite pull back to the wave 4 of 1 lesser degree, but let's just double check the 38.2% roughly there. So that comes in quite nicely really in here for that. So that's cool there. I worry about that because it's a little bit smaller than this one here, and this green one is 1 degree smaller. So normally I'd expect this to be this one here to be bigger. So is it possible that we've got a bigger trend going to continue up here, and I would need to look at this here from wave 4 here. I would need to look at that as wave 1 and wave 2 here. So these are sorts of things that go in my mind when I'm looking at these things. But yeah, so we'll keep an eye on that. And here we've got 1 and 2 here, then we've got 1, 2 and 3 and 4 and 5 here for this. So we've got 1, 2, 3, 4, 5 here for the A wave down here, the B wave and the C wave. So we should be sort of close to being finished on that little number there. So that would be here at wave 2, if I can get that there somewhere. We've pulled back enough anyway. We've pulled back 50% rather than 40%, so that's cool. It's okay, and to the wave 4 of 1 less degree as well. So it's good and it's okay, you know. And all of this doesn't bother us at the moment because, you know, we've traded to the next largest number and we're expecting a correction. And you can, you know, we just get out. I mean, you could say, oh, Pete, but look, it went higher here, or we've got another little move in through here that's taking us higher still. But I can say to you that over the many years that I've been doing this, it's much cleaner and less emotional if you just take the money at the next number and then just let it go, and then don't worry about getting involved in this, because there's a 90% chance or more that there's going to be a correction at you know, a minor level or a medium level or whatever, and you're better off taking the money off the table and sticking the money somewhere else in another setup somewhere else, you know, keep moving, grooving with it all. So yeah, we're just going to leave it at that. As I just mentioned, there's a good chance that we've got one more high to come in through here to make this wave 5 here, and then we'll have a correction after that. If I've got it wrong, this market's going to continue to go up here, but then we'll catch it on top of the 1830 as a tested support, and then I know that we'll be trading way up to the 2000 at that point. So we just really want to let the market have its little dance across the 18 here, and we'll pick it up in due course. So I don't think anything else is there, but I might just chuck in iron ore while we're here. So we've been triggered long in iron ore here with 1 and 2 and 3 and 4 and 5 here for wave 1 and back for wave 2. So I might make this the commodity section and add iron ore and maybe a few others. This is daily chart for copper here. We've been watching this A and B and C wave come in here. So this is corrective here. So we're looking for this top to be taken out in copper. It's hitting a medium level here at 65, 6,500 or 65. So we'll also see copper have a correction there as well for that. So anyway, I'll just move those out of the way, but I just thought I'd pop them in there. We might make that sort of videos on the commodity section as such. Alrighty, I think I've said my piece and I'll leave it at that, and thanks for tuning in, much appreciated. Cheers.